Rob, well, a couple of things, right? So there's the price cap story. I mean, there's also sort of the forward-looking story where you look at 2023 and it doesn't seem like the world will need as much oil as it initially thought. Just take us through the thinking, really, of what traders are looking at right now, given where prices are below 80, of course, for some of these contracts on Brent.
Yeah, I mean, I think traders are really worried, and rightly so. I mean, we've just seen crazy market moves, $5 moves in the market on a regular basis, and that's sort of led to a lot of traders just closing their position if they're up for the year, you know, and a big drop in liquidity. We're at a third less volumes than this time last year, so it really feels like you know, the lack of liquidity is really starting to hurt oil prices, and yeah, people are just trying to solidify any gains they had this year as prices fall.
Rob, give us a sense of how the European Union's oil cap or price cap for Russian oil is likely to move the needle, if at all, and how does all of this affect the supply-demand dynamic?
Well, that's a good question. We don't really know how it will affect supply-demand at the moment. The Russians have come back and said that they plan to have a floor instead to sort of oppose the EU cap. We're still very much waiting for details on what that will look like and what the insurance, especially the insurance, which is the key part of the whole deal, will look like. Until those matters become clearer, people are just looking at whether Russia will actually supply less oil to the market, and that's the big elephant in the room. And how much appetite they have for that, how much more can they lose in energy revenue terms, after, of course, losing all the gas revenue they've lost so far this year. So it's a big question with no answer yet.